Hello everyone, welcome to another episode of Do Academy. Gold is one of the most traded precious metals in the world, due to its reputation of being a safe and reserved investment. Besides this, gold price volatility also appeals to many traders and investors as they can make significant profits in volatile markets. However, trading gold in its physical form can be very costly, dangerous and illiquid, which exposes traders to a multitude of risks. Thankfully, with the advancement of financial technology, we can now trade gold through alternative methods, one of which is through the contract for difference, CFD. CFD is a popular derivative product that is widely traded in the financial market as it enables traders to speculate different markets such as shares, forex, indices, and commodities, without having to take ownership of the underlying assets. This is because traders are only buying or selling a limited amount of units at a time. As the name suggests, contract and difference means that traders are in agreement to exchange the differences in price of an asset, such as gold, with the ticker symbol XAU. That's the general idea of gold CFD. Now, let's see how would it benefit you as a trader. Leverage is a well-known tool for professional traders as it can easily amplify their profits, making money work harder for them. Through leverage, a trader only needs to put down a fraction of the value of an underlying asset. It represents something like a loan. A line of credit brokers extends to their clients for trading. For instance, with a leverage ratio of 1 to 400, clients would only need to fork out for $90 per ounce of gold to maintain the leveraged position instead of the full cost of $1,970. This also means that traders are able to utilize for $100 with only $1 as a minimum required margin, allowing them to stretch their initial capital and amplify profits by 400 times. Traders are able to access the global market anytime, anywhere. Trades are conducted over a network of computers rather than a physical exchange, which closes at a specific time. Online CFD brokerage platforms are available as long as major global financial hubs in Australasia, Europe, and North America are open. The different international time zones of these hubs allow trading to be available around the clock. Markets constantly fluctuate. Since CFD means profiting from the differences in prices of an underlying asset, this means that it allows traders to potentially make profits from all types of market movement, which in turn allows traders to apply a plethora of trading strategies, which we will explain next. This kind of trading style flexibility is, in general, hard to come by in conventional form of trading, as stocks and exchange-traded funds, ETF, only allow a trader to buy long and not sell short. This is why CFD is favored. Let's now dive into the basic strategies you can utilize for trading gold CFD. Traders capitalize on market momentum by opening a trade when there is a noticeable trend. It is like a watch collector that invests in a watch when it gains popularity and selling it when the popularity subsides. Strong trends are commonly formed when there is a collective view towards a certain market. Traders who use scalping strategies are typically called scalpers. They place frequent intraday trades to speculate on small price movements of an asset. This allows traders to make smaller but frequent profits, as opposed to waiting on a larger and clearer trend. This is why it is frequently used when markets are uncertain, especially when important news or data prints are close to release. Take Federal Reserve's rate hike decision as an example. Here we can see the price stays within a tight range until the rate decision is released. Scalpers would trade within the tight range, buying at support zone and selling at resistance zone. An expert advisor is an automated trading system that enters and exits a position based on a set of prerequisite rules written by a programmer. It performs prompt and unbiased technical analysis of price data for any assets or timeframes, which allows traders to perform high-frequency trades without constantly monitoring the market. Ultimately, trading gold CFD have definitely become one of the most popular way for traders to get access to trading gold in recent years, particularly for retail traders. We hope that you have gained a better understanding about gold CFD. Be sure to like, share and follow for more actionable insights now.